Stop whatever you are doing. Ripple just turned a $1.2 billion swipe into a $3 trillion tidal wave, and hardly anyone is talking about it. So imagine waking up tomorrow to find your favorite sleeper coin blazing past $28 while the rest of the market just rubs its eyes. Sounds nuts, right? So here's the deal then, right? I was halfway through my morning coffee when a headline smacked me harder than the caffeine. Ripple's director confirms that 𝗕𝗓𝗪𝗧 will power Hidden Road's post-trade infrastructure. The translation? One of crypto's oldest ledgers just muscled its way into a corner of finance that still runs on software older than my dad's ringtone. Now today, I'm going to be unpacking how a single acquisition could yank $3 trillion, yeah, with a T, onto the XRP ledger. Why it matters for everyone who's ever kind of stared at a stuck withdrawal screen, and whether the kind of wild $28.55 price target floating around is just pure hype or a potential hint. And somewhere in the middle of this, I'm going to let you know about our free crypto Discord, link in the description below, and is kind of already dissecting this move by Ripple in real time. Because why read a dusty forum when you can talk to living, breathing chart nerds who barely sleep, right? All right then, picture this, right? Your Hidden Road, a kind of prime brokerage quietly kind of shepherding institutional whales through oceans of foreign exchange, equities, and lately digital assets, right? Your customers, about 300 of the biggest wallets, in kind of pinstripes, push, roughly $3 trillion in trades every single year. It sounds glam, right? Until you kind of peek behind the curtain and see that all of that money is crawling through a settlement maze that's built in the kind of Jurassic era. So we're talking wire transfers that take longer than a Netflix binge, right? Reconciliation spreadsheets so clunky that they could kind of bench press Bitcoin, and a kind of swarm of middlemen nibbling fees, like seagulls at a beach picnic. Enter Ripple, checkbook a-blazing, dropping just over $1.2 billion to buy Hidden Road outright. So I hear you say, why blow a cool billion on a broker that nobody on crypto Twitter can even spell? Well, it's simply because of post-trade, right? It's the boring stuff that actually happens after a trader hits buy. Is kind of the exact plumbing that kind of decides whether Wall Street fully dives into blockchain or keeps dipping its toes while complaining that the water is chilly. Now Ripple here, they just strolled in, pointed at the XRPL and said, we can heat your pool. So let's go ahead and zoom in here, right? Cassie, Ripple's managing director for the UK and Europe, basically serves us kind of the blueprint over a kind of triple shot espresso of bullet points, right? You've got the XRPL. It isn't just kind of tagging along. It's actually a new engine, right? Every trade that Hidden Road clears, FX, crypto, you name it, moves downstream onto the ledger. Now collateral gets kind of a makeover too, thanks to RLUSDs. This is Ripple's shiny new US dollar stablecoin. So rather than kind of posting cash that kind of sits like a rock, institutions will kind of plop RLUSD on the XRPL, letting it kind of zip around at the speed of light while still behaving like dollars. And then, of course, there's the cost slash, right? Settlement fees will shrink because you're kind of vaporized half of the third parties, right? Think about cutting out the middle kind of school gossip and going straight to the source. Now, does cheaper, faster plumbing put food on the crypto table? The answer? Potentially, because the ledger's native bridge asset, that's our buddy XRP, could be the grease between every RLUSD to anything hop. Now, if Hidden Road really kind of funnels its entire $3 trillion flow over the XRPL, even a tiny fraction needing XRP liquidity is like dropping a kind of blue whale in a kind of suburban koi pond. The splash gets messy, and in a really good way. So, cue the speculative fireworks then, right? An AI model nicknamed Grok crushed numbers and spat out an eye-watering scenario. XRP moons to $28.55. That's about a 13x jump from where it is looking at today. Now, before you kind of mortgage grandma's garden, remember the model assumes every single cent of that $3 trillion journey uses XRP. Now, in reality, adoption curves look more like kind of ski slopes, right, than kind of rocket launches. Fun, but you still start at the top and slide down before you kind of get any real airtime. So what's the catch, or where's the catch? Well, the thing is, post-trade infrastructure is a phrase that could cure kind of insomnia, right? The most retail traders, they don't even really notice that it exists until something really breaks. Like the time that your kind of withdrawal got randomly selected for review, right? And the weekend kind of evaporated. Now, institutions, though, right, they live or die by settlement risk, right? The longer that money sits in limbo, the more capital that they have to kind of lock up just in case someone kind of ghosts the bill, right? Now, that kind of idle cash is basically an expensive paperweight. Now, 𝗕𝗓𝗄 shrinks settlement from days to seconds, freeing up billions that could be reinvested, or heck, used to buy more crypto. So let me tell you a quick story then, right? A buddy of mine worked at a London trading firm. Now, last year, their ops team spent about 3 hours piecing together a lost trade confirmation because two systems couldn't talk, after a kind of Friday night upgrade, if you will. Now, 3 hours for one trade, multiply that by thousands, add human error, sprinkle in regulatory fines, and you've got a silent profit killer, right? He messaged me in this morning kind of saying, if Ripple actually automates half that mess, I'll send them flowers, right? And I suggested XRP instead. But there's another layer here, regulatory optics. Now, Hidden Road services institutions that treat compliance like religion. Now, by baking transactions into an immutable ledger, you create an audit trail more transparent than grandma's crystal vase. Now, regulators, they love that, right? It's kind of like switching from sticky notes to Google Docs that the kind of whole team and the teacher can see. Now, no good crypto tale is going to be complete without the boogeyman. The challenge, right? So bridging TradFi egos, with DeFi rails, well, banks are kind of allergic to the word token, right? They prefer digital representation of value, right? Thank you very much, of course. Now, convincing them to hold RLUSD or Touch XRP, it requires a kind of airtight risk model, in insurance clauses, and maybe a kind of few therapy sessions in between. Right? Ripple's gamble here is that Hidden Road's, clientele are already comfortable dipping their toes into digital assets, right? They just need kind of rails that feel enterprise grade. Now, if those 300 clients see lower costs and faster turnarounds, well, peer pressure does the rest, right? It's kind of the corporate version of seeing your neighbor's new EV and suddenly noticing gasoline smells weird, right? So let's go ahead and unpack the RLUSD angle here for just a second, right? Stablecoins, they live or die on credibility, right? Tether survives because, despite drama, it's absolutely everywhere. USDC thrives on audits. RLUSD needs a killer first date, and this is it, right? Day one, utility inside a brokerage that moves trillions of dollars. Institutions care less about meme logos and more about credit risk, right? If Ripple can prove, reserves, RLUSD becomes the cool, non-volatile kid at the lunch table. And another subplot, interoperability, right? XRPL isn't a lonely island. It actually talks to Ethereum via sidechains, to Bitcoin anchored kind of networks through bridges, and even flirts with central bank digital currencies in pilot projects. Now, Hidden Road's asset basket is massive. You've got FX pairs, treasuries, crypto pairs. So plugging XRPL into multiple liquidity pools is going to be crucial. So think of XRPL as the universal power adapter in your kind of travel kit, right? One brick, one socket. But let's get selfish here for a moment, right? What's in it for the retail holders, right? Liquidity depth, right? When big players trade through XRPL, market-making bots jump in, right? Spreads tighten, liquidity and volatility stabilizes, right? Remember how early Bitcoin felt like riding a kind of unicycle on a trampoline, right? Mature liquidity turns that into a smooth longboard cruise, right? Smaller spreads also mean less slippage when you finally decide to ape in during a kind of midnight inspiration burst. And still, right, the roadblocks aren't tiny, right? Integrating kind of, a chaotic kind of back office software into a modern blockchain is like kind of shoving a Tesla battery into a kind of steam locomotive, right? You're going to need APIs, standardized messaging, fallback protocols in case validators kind of sneeze, right? Ripple has to convince the CFOs that downtime risk is as low as their kind of decades old Swift rails, right? Fail once and headlines write themselves. And, well, timing is spicy too, right? Global regulators are drafting playbooks for stablecoins, custody, and tokenized securities faster than we can keep track. Ripple's advantage here is its habit of playing the kind of compliance game early. Remember their kind of partnership roster, including banks that wouldn't touch anything unlicensed, right? Hidden Road gives them a kind of Trojan horse, if you will, into boardrooms still undecided about crypto. If XRPL nails post-trade at this scale, well, other brokers will feel the FOMO. So let's circle back to the $28.55 price prophecy, right? Numbers sometimes can feel magical, but utility, it still rules. In 2017-2018, XRP's price pumped 110,000%, largely on hope. In 2025, real-world throughput and fees paid through the ledger could justify a re-rating. So suppose even 10% of Hidden Road's flows use XRP as bridge liquidity. Well, that would be $300 billion. Now, an average transaction fee on XRPL is roughly a fraction of a cent, but the liquidity demand shows up at least in the on-demand XRP purchases. So more demand than supply, which obviously means that price will move. So this isn't a case of kind of, flight to Marseille, but instead, higher torque. Okay then. Storytime part 2, right? I ran a simple napkin model last night, as you do, right? If liquidity providers need to kind of hold just 0.5% of the monthly settlement volumes in XRP to make markets frictionless, well, that's about $1.25 billion. Now, in kind of required kind of float per month, essentially. Currently, right, daily XRP spot volumes, they hover around $2 billion. Now, it's feasible, but, liquidity providers would have to kind of source XRP rather aggressively, potentially tightening the flow. Supply shock meets demand pop. And yet, speculation alone never kind of built a kingdom, right? Sustained usage did. So, which is kind of why Hidden Road's 300 client rosters really matter. So it's not just kind of big banks, it's hedge funds, high frequency traders, asset managers, right? They talk to each other at conferences behind lattes and, that kind of cost more than maybe my sneakers, right? Now, if one firm saves millions on capital efficiencies, right, the whispers turn into a bit of a roar, right? Have you ever noticed how one influencer buys a certain kind of sneaker brand, suddenly everyone's feet looks identical on Instagram, right? It's the same energy. Now, of course, right, we cannot forget about the elephant called legal pressure, right? Ripple's battle with the SEC, still casts a little bit of a shadow, right? The potential victory last year was big, but, final clarity is still kind of pending here. I think we're on the countdown from a 60-day run. So institutions kind of hate gray areas. Hidden Road signing on despite that kind of shows confidence, but broader adoption may hinge on that kind of gavel dropping cleanly, for Ripple. Now, if Ripple kind of scores a decisive win, the green light kind of, multiplies exponentially, right? And if not, well, detours do exist, but they can slow the bus down a little bit. So let's go ahead and shift gears just a teensy bit here, right? XRPL's throughput, right? The ledger handles around 1,500 transactions per second natively, scalable through sidechains and parallelization, right? Now, $3 trillion, it sounds impossible until you realize that settlements, isn't kind of tick for tick, right? Trades can batch, right? FX desks might compress thousands of micro fills into a single net settlement. So kind of, I guess, paying one dinner bill instead of splitting every appetizer with separate cards, right? Every kind of batching and sidechains, or at least with batching and sidechains, XRPL's kind of highway widens exponentially. And let's be real, Ethereum L2s process similar dollar volumes daily despite higher fees, right? An optimized XRPL isn't kind of hypothetically kind of far-fetched either. But the numbers are the numbers, right? Stories kind of stick. So imagine a Friday afternoon in 2026, right? A hedge fund trader executes $1 billion yen to euro swap. Now, traditionally, that trade would kind of spend the weekend kind of lounging in settlement limbo like lost luggage. On XRPL, it zipped, cleared, and reconciled before the trader's espresso calls. Now, compliance officers get automated audit files, treasuries see cash, freed instantly, and risk managers sleep better, right? That's not sci-fi. That's code running on servers quietly humming in data centers right now. And speaking of humming, let's address you, right? The human holding a phone, right? Possibly scrolling while waiting for your latte, right? How do you surf this wave without drowning? Well, first, knowledge trumps FOMO, right? Join our free Discord server. Yep, the link is in the description down below, right? Where we kind of break down moves like this. We call out red flags and we share charts before Twitter's trending tab catches up. It's basically a group therapy for market addicts, right? Minus, of course, the fake gurus. And second, diversify, right? Even if XRP does launch to Mars, right? Gravity still exists, right? Big wins come with wild dips. Hidden Road's adoption is of course going to be a marathon, not a sprint, right? Treat any kind of moonshot model, AI or otherwise, as a kind of fun conversation starter, not financial gospel. I like to keep a kind of sticky note that says, never marry a bag, date it. Try it, oddly kind of therapeutic in a way. And third, you got to watch RLUSD, right? Stablecoins kind of rarely stay backstage. And if RLUSD's liquidity balloons, exchanges will list it, right? DeFi protocols will court it. And suddenly your MetaMask may ask add RLUSD, right? Ripple doesn't have to win the stablecoin war, just carve a reliable institutional niche. That alone can funnel fresh eyes and capital towards the broader XRP ecosystem. Now, by the way, a lot of people have been asking me why Hidden Road's clients wouldn't just use USDC. Simple, really. Integrated collateral, right? When the same ledger that records your trades also kind of tracks your margin requirements and gives you automatic settlement, operations, at least operational kind of friction kind of plummets, right? It's kind of like upgrading from juggling 3 remotes to a single universal clicker that actually works, right? First time. So it's time for the climax, right? The moment that kind of gears click, right? Imagine the kind of first quarter after XRPL goes live at Hidden Road, right? Financial reports leak showing a 40% drop in settlement costs and tens of millions in freed capital. One headline reading, broker slashes post-trade expenses with blockchain. It triggers a chain reaction, right? Competitors will scramble, boardrooms, calls, emergency kind of Zoom meetings, and, Ripple kind of sales team suddenly can't keep track and keep up with all the demo requests, right? That's kind of the tipping point where speculation morphs into an inevitability. I remember how cloud computing went from scary to why aren't we all in the cloud, practically overnight. It's the kind of same metaphor right here. And so if we get there, and yes, it's an if, well, liquidity and network effects snowball. Developers build tooling, fintechs plug into the rails, and average users benefit from faster, cheaper global transfers without ever realizing XRPL handled the heavy lifting. Right? That's the real adoption. Invisible, reliable, and baked into everyday life. And so, let's bring this video to a bit of a close. Right? Ripple buying Hidden Road isn't just another acquisition headline. It's a calculated play to yank the plumbing of a multi-trillion-dollar industry into the 21st century. Right? XRPL becoming the kind of settlement layer, RLUSD the glue, and XRP the grease in between. Right? It will guarantee or at least I should say, will it guarantee a $28 token? Not by itself, but it shoves a gigantic door wide open. And behind that door sits 300 institutions, already holding the keys to monstrous liquidity. Now remember, revolutions, they often start in the least flashy departments: accounting, compliance, back office operations, right? If Ripple nails post-trade, every other broker stuck in paper-cut purgatory, will line up to kind of copy-paste the blueprint. And that's when the network value, not hype, does all the talking.